What's up, Mortgage Coach? Dave Savage, CEO of Mortgage Coach, and I am with Ryan Kiefer out of Cincinnati, Ohio. What's up, Ryan?
Hey, how's it going?
Going good, buddy. So I have interviewed Ryan quite a few times. He has been a black belt in Mortgage Coach for a long time. Today, he is a very successful producing branch manager. His branch did over 1,400 units last year, and Ryan does over 60 loans in personal production a year. So Ryan, you do a great job in a lot of things. One, you are the Cincinnati partner with American Dream, so you're using media and you're building personal brand, and you're an advisor. So why don't you just share everybody how you're using Mortgage Coach to build your brand as an advisor and anything that you're doing, in media in your market.
Sure. Yeah, no, great question, and glad to be here as always. You and I have chatted quite a bit over the years. I was, I think, one of the early users of the Mortgage Coach when it was just a spreadsheet, and it wasn't web-based. It was actual software. I think you had to download onto your laptop. And I remember coming to one of your earlier conferences. I think it was maybe 05-ish or so out in Denver. So going way back, but I've been a big component over the years, of course, and love, of course, where the software has gone. Totally slick these days with the video piece and being able to almost like live file share if you don't do the video part, if you got a client on the other end. So really how I've used it to position myself is simply that. I know we talk about it a lot, and it might even sound cliche, but that of a trusted advisor. You have to differentiate yourself. We've been going through this whole margin compression thing for the last year and a half, and so it's price versus advice, and now more than ever. So if you're not using the Mortgage Coach to differentiate yourself and to actually give value to someone versus just, hey, here's my 30-year fixed and here's my closing cost and hoping for the best, you're really doing yourself and your clients a disservice.
So you've done a good job of being that advisor, and as a branch manager, leading a lot of loan officers. Your branch you've done a great job of getting them to use Mortgage Coach. So it's like powering your unique value to the consumers, but you're doing a lot with media, Facebook, American Dream. What do you just really quick before we get into some specific Mortgage Coach strategies, what are you doing to build your brand, in social and video right now?
Yeah, well, I think, fortunately or unfortunately, depending on how you look at it, I live in Cincinnati, we're in the Midwest, so things take longer to get here, right? So, video and social media and that's a little slower moving here, on the coast, it's huge. People have been doing it for years. And here I feel like I got a nice head start. I probably got a 3 to 5 year head start on everybody else by, branding myself on social media and using the American Dream as part of that, posting things to Facebook and Instagram and LinkedIn and that. And it's really, it's sort of like the Mortgage Coach in a way, in that it's a credibility builder. You're going out there, you're trying to buy brain cells, you're trying to drip on people without being obnoxious about it. Let them know that you are the authoritative voice or the digital mayor of your town, as Gary Vee would say. And, just really trying to show people that you're a trustworthy source for not only information, but hopefully to be able to earn their business.
Got it. How often are you posting? And, just give us a rhythm for the type of, volume of media that you're creating in the marketplace to be that digital mayor.
That's something I struggle with. I'd post, I wasn't a guy that ever wanted to mix and mingle. I always thought Facebook was personal, and I've finally gotten over that because now I realize how much business you can get from it. But I still struggle a little bit with posting too much business and trying to sprinkle that in along with the personal stuff that, of course, tends to get more likes and comments. So to answer your question, business-wise, I post on average just about once a week right now, because I do have the weekly American Dream videos, the Mortgage Minute that comes out. So that becomes pretty easy to post because they do it for me and I share it. That's, Mortgage Minute Monday, every Monday that comes out. So I probably will step that frequency up eventually. Just trying to figure out the right place and right time to do that without, being a little too much and having my friends and family unfollow me.
Yeah, well, and the way I like to think it, there's life, like who am I as a human being? And if you're a family man, you're a family man. Who am I as a business leader? Mm-hmm. And then there's, the right hook. When do I show up as a business leader and ask for business? And I am hearing more and more, whether you're throwing the right hook or not, if you're doing social right, you're getting business from it. And when you throw right hooks, that's code for a business message with a call to action. Yep. It's profitable, man. It sounds like you're closing business.
Absolutely. It's very profitable. Yeah. Jab, jab, right hook. You got to do it.
All right. So let's do this. So, guys, I am preaching out there that you need to build that personal brand. You need to use media. If you do want to learn more about, being a partner for American Dream, reach out to me, Dave at mortgagecoach.com. Let's transition into advice and specific strategies. I always like to do it like there's a family story, there's a strategy, and there's a total cost analysis. So you're going to show us a TCA. What's the story behind the TCA?
Yeah, the story behind this one, a scenario we get a lot is, somebody coming to us, whether it's a first-time buyer, a move-up buyer, they've got 5%, maybe 10% to put down. They're shopping around. They don't really know what to ask for. They're just asking for, what's your rate, what's your closing costs? That's all they know. They don't know any better. So, when we get someone with less than 20% down, we're like, all right, now we got a chance here. We're not just competing on rate. Now there's more of an education strategy involved with, how you skin the cat with PMI, so to speak, and getting them out of TCA and then talking them through, which option is going to make sense, of course, depending on how long they think they're going to be in the home. And, I know they don't have a crystal ball, but again, depending on how long they think they might be there, that's going to make more of the strategies make more sense than the others.
So let's put up the total cost analysis that you have.
Yeah.
And what my takeaway for anyone listening to this, we always talk about what are their hopes and dreams and their goals. And now let's build a total cost analysis that helps them do it. So in this particular case, either moving up or getting a home is a hope or dream.
Right.
Doing it with less than 20% is a critical goal. And now, how are you driving that with the total cost, and what are we looking at here?
Yeah, so this one here is this was a move-up buyer. So, a $368,000 purchase in our market is a move-up buyer. I know that's probably a first-time buyer, if even that, out there in California and Oregon. But that's a move-up buyer for us here. So 5% down was all they had, and then forget, how or why that was. But, very simply, what I usually do is I don't like to put 4 or 5 options on here and get, paralysis by analysis. I usually always try to do 3 options on here, whether it's conventional versus FHA versus, conventional with a buy down. But this one is sort of the bread and butter. Okay, conventional, 30-year fixed, 5% down. Let's go through the MI options. So you want me to walk through sort of each?
Yeah, let's walk through it. We'll go to the top real first, because I just want to remind everybody, if you see the top, it's got your company brand, it's got your personal brand. So I like to call this personally branded advice experience. So walk us through a little bit. And
so what I do, I always record a video with these unless I'm doing it face to face, with the client sitting down, or unless I have them on the phone and we're going through Edge Live. But 9 times out of 10, I'm doing a video. So I try to keep those 1.5 minutes, 2 minutes or less, not too long, with a call to action at the end. But very simply, I just go through and I say, okay, traditional 30-year fixed. I'll say traditional in the sense that it has monthly mortgage insurance, which might make sense if, hey, you're going to make improvements to the house, you're getting a really good deal on the house, and whatever, myriad of reasons why monthly MI could make sense. I don't go into all that in the video. I just say, we can talk offline and figure out, pluses and minuses of each strategy, right? So that'd be the option 1. Option 2 would be, we call it our Prime 95 loan, trying to shamelessly brand it as if it's unique to us, but it is simply a single premium. So we're doing a buyout at closing. We could bump up the seller paid closing cost to help offset. In this particular case, I did, just have them bring in the cash to close, but I do tell them, hey, we can always raise the purchase price, sort of almost a buy up strategy, like we were doing a few years back with interest rate buy, which was a good one. And then just explain to them that, hey, this one's going to generate your lowest monthly payment out of all 3 options. And that's because we are buying out that PMI up front with a one-time fee at closing. This one makes the most sense if they're going to be there long-term, longer than 5 or 7 years, that sort of thing. And then finally, the last option would be lender paid mortgage insurance. Maybe this is someone who is only going to be there for 3 or 4 years. They like the lower payment versus option 1, don't want to pay the upfront money that the single premium would bring, and they want a bigger tax deduction by taking a slightly higher interest rate. So again, pluses and minuses for each. The gist of this, or the goal, is to educate them a little bit, but then have them call me to maybe want to do a sit down face to face and actually app them versus, a loan officer at ABC Mortgage who just sent them an email and said, here's what they're here.
Right. So scroll down a little bit so we can see, guys, what makes this powerful is its options, its education, and then he's showing it to them in different windows of time, monthly, 60 months,
Yep.
and
I'll
7 years.
60 months and either 7 years or 10 years, depending on when I first talk to the client, kind of what sense they give me on how long they might be there. If they're saying, yeah, this is a 5 to 7 year play, I'll do 60 and 7 years. If they're saying, oh, it's a longer term thing, bury me in the backyard kind of thing, I might do 10 or 15 years in that bottom section down there.
So tactically, what's going on is he's asked questions, he's heard goals, and now he's showing mortgage strategies to achieve goals. And then from the science of selling, what's happening here is people always know, like they're judging you from the minute they talk to you going, do I trust this person? And do I respect? Like, does this person, are they an authority? And by showing options like this, it's a next level of transparency. So it builds trust faster. And it's showing that, hey, I'm an expert. They've never talked to a loan officer that's showing this kind of presentation. So that is what's triggering the conversion, the faster trust. So Ryan, real quick, I always like to pull scripts out of these interviews. Go back to the top where we can see the branding.
Yep.
Before you show this to a family, before you email it to them, before you send it to them, what's your scripting so that when they get this, they click on it? Like, give us a script.
Yeah, well, I've watched plenty of mortgage coach interviews over the years, and I love to borrow or swipe and adapt, and make it my own. And I love some of the Jeremy Forcier and the Tim Brahim stuff that, hey, here's what's going to happen. I'm going to put together. I'd like to take this conversation together, some options for you that I think make the most sense for you and your family. What I don't want to do is throw a bunch of rates and closing costs at you over the phone. Matter of fact, I find that to be unprofessional, and people do that because this can be a very overwhelming process. So at that point, you're just, of course, setting up your competition because that's what they're going to do, right? So that's sort of how I set it up, and then I send them the email.
Well, then what do you call this? Like, okay, like that was the opening, and then you say, and what I'm going to do, and do you call this
total cost analysis? It's going to, show a few options that can make the most sense depending on a couple of things. Take a look at it when you can. Give me a call. We can go over the finer points, ins and outs. Really drill down on what makes the most sense for you and your family.
Okay, so guys, I'm going to put a link down below. If you've not heard the Tim Brahim, the Jeremy Forcier script call, and Danny Harani was on it, I think it's our most viewed video. I'm going to put a link down below, and it's incredible. And I'll put a link because I not only did the interview, but then I wrote a LinkedIn article that actually scripted out all the scripts. So I'll put a link to the transcript and all the scripts, and a link to the call. And I think that was the interview you're referring to that kind of inspired what you say and how you say it.
Yeah, I printed out the script from that was attached to it originally. I think it's a 15 or 16 page Word doc, and gave it to all my guys, and highlighted that page with all that, like use this.
Yeah, I love it. I love it. So let's wrap up on a couple things. I know you sent me an email that you sent to your crew a couple days ago on Amazon, just this. Every mortgage professional needs to know this acronym, WACD, what Amazon can't do. And you need to be doing that. So you need to be delivering personally branded advice. But kind of speak in these last closing thoughts as a producing branch manager that leads a lot of loan officers. And this is an interview we're doing for the whole mortgage coach community. What's your take? What do people need to be doing as it pertains to mortgage coach advice over the next couple of years?
Well, I think they need to double down on it. You were alluding before about, using mortgage coach and helping, capture, converting more leads into deals. And, I think I've told you this several times over the years, and it still holds true, probably even more so. If I find myself either, getting lazy, or maybe I feel like every once in a while I don't need to do a mortgage coach, my conversion on those leads is probably under 50%. If I send a mortgage coach out and it doesn't have a video with it, it goes up. But when I do one with a video, it's probably 70% conversion. You have to do it in this day and age. It's a differentiator and then some. So especially going forward, when people are so busy, they don't have time to meet face-to-face, which face-to-face is still great. If you can do that, that's the ultimate, right? You want to meet
absolutely
prospect face-to-face. But if you can't, you got to send a mortgage coach out with a video. You got to be active on social media. If you don't think that your leads are Googling you or looking you up on Facebook before they ever reach out to you, even if you were a warm referral from a realtor, it's like, come on, don't kid yourself here. They're looking you up. So the gist of the email to my team was that, you've got to get on board with this stuff, because let's face it, technology is here. It's not going anywhere. I quoted you, Dave, of course, technology isn't going to put loan officers out of business, but loan officers embracing technology will put the ones not embracing it out of business, certainly. So, you have to embrace technology. You look at what's happened to taxi drivers, they were enjoying 85% market share back in 2014. Now what do they have? Uber comes in and Lyft and just blows them out of the water. So it's like, I know Craig always likes to say Uber's the largest taxi company that doesn't own a car. Netflix, there's no physical stores. Airbnb, largest hotel company, doesn't own any property. So technology is here. You have to embrace it.
All right. So you said a lot. I want to break some stuff down. First of all, in my quote, I don't say embrace technology. I say master technology. So it's okay.
I did quote you right in the email.
Yeah. It's high touch, high tech experience is where it's at. And we advocate for meeting people in person. In fact, I'm going to put 2 more homework assignments down below. I interviewed a loan officer by the name of Jay Crowell. And by the way, Ryan, you should watch this, because one of the things he's doing in the TCAs is he's labeling the products strategy 1, strategy 2, strategy 3. So he's further delineating himself as it's advice. It's not loan products, it's mortgage advice. So he still brings a big portion, over 70% of his clients into his office, and he talks about the mortgage coach in office experience. So that it's like, hey, I'm showing a mortgage coach while they're in the office. They're downloading the app. I'm showing them that, hey, I'm going to be updating this. So link down below to Jay Crowell's modern in-office mortgage coach experience. Also, a trend I'm seeing a lot in the mortgage coach community is using mortgage coach to help provide clarity to move up buyers. And I interviewed Aaron Coker in the Pacific Northwest. He's in Portland yesterday. And what's awesome about his thing is he's showing how he's helping a family who has a home that they don't want to do contingency. They want to buy that house, can't go contingency, don't have enough money for the down payment. So he's showing them, hey, here's how you can buy the house with a low down payment. And then, hey, here's a recasting strategy, or here's paying down a credit line strategy. So after your home sells, you can get your payment down. So down below, some mortgage coach strategies to help you guys with move up buy. So last thought is this interview will be part of the Mortgage Coach Strategies session series. And I believe this is I'm scrolling through, this is number 27. So I've done 27 of these Mortgage Coach Strategy interviews. You can watch them in the YouTube channel. And then my team has created a new page on our website called Mortgage Coach Strategies, where they're taking the best of breed mortgage strategy and creating kind of a training obstacle course for you guys. So that you can, you want to know how to do a rent versus own, go watch the rent versus own in our mortgage strategies interview. You want to know how to do a move up, go watch it in our mortgage strategy. So check those out, guys.
Nice.
Ryan, I want to keep this under 20 minutes. We've got about a minute left. Any parting words before we wrap it up?
No, I would just say, a lot of people, I think, fear, I know for my own team, that, they fear messing up on a video, or they don't like the way they look or the way they sound. You got to get over that. It's the way everybody sees you. It's the way you look, in the world. So, get over that. The other thing I would tell you, one of the things I practice on the American Dream, the reason I always do one take, and it's not because I'm perfect, far from it. Just don't try to be perfect. You want this to be conversational. You don't want it to come off as fake or scripted or sound like a newscaster when you're talking to your potential clients on your videos. So just get over the fact that you have to be perfect, jump in and do it. Like anything, it's going to take you a few of them. You're probably going to have to get through 3, 4, or 5 of these to where you get comfortable with it. And, then it's no big deal after that. You just fire these off.
Love it. Hey, click that little video button. I just want people to see it. If you're new to Mortgage Coach, when you click on it, the video just starts playing. And then, of course, you can minimize it and put it down. But absolutely, put a video on it. You're going to improve your conversion, and you're gonna have more fun and make more money. So if you got value from this and you liked it, give it a like down below, whether you're watching it on Facebook or YouTube, and share it with your mortgage friends. Hey, brother, I appreciate you doing this interview, and looking forward to seeing you in person sometime soon.
My pleasure. See you soon.
Take care, man.
Yeah, you too.